Thank you all for joining me today on this webinar. We'll be diving into the Century Trader platform. We'll be looking at what are the features that it has, how the interface works, and also we will be looking at real-time analysis, how we can use these analysis to make informed decisions when you're investing or you're trading. More importantly, it comes down to how good your risk management also is in place when you're taking any kind of action in the market, right? Finally, if we at the end of the session, if you all have any questions, please feel free to ask me some questions. You can also ask me questions while we are doing the session also, and I will try and answer as many questions as possible. So let's go ahead and dive into the platform. I hope you all are able to see my platform. Just let me give me a thumbs up or just write in the chat message if you can see my screen, if you can see the platform as well. I think now the platform is visible to all of you all. If at any point in time, if my platform is not visible, please let me know, and I will make sure that the platform is visible for all of you all. I hope you all can see the platform. Okay, I'm getting a lot of thumbs up. Okay, perfect. All right. So now diving into the platform, I will just run you through all the features that is there on the platform. As you can see already, what is open, you have your positions tab, meaning any trade that you take or any investments that you have made, you will see all of these reflecting over here in the tabs, in the position tab. Now there is an order tab. What exactly is an order tab? Order tab is basically you want to buy a specific stock, but you want to buy it when it comes to a desired price level. Let's say there's a stock that is at that is trading at 150, but you want to buy it only if it comes to 110. So you can always place an order for that particular stock at 110, and that will remain in your order position. Execution blotter is basically everything that you have executed. You will get a detailed report of time, date, what type of an order that was, the ID, the product, the number of units, price, at what price you had bought, stop loss, take profit, etc. History also has similar criteria, but history will show you more in details, especially if you're holding a stock and if you receive dividend, you'll be able to see all of those dividends that you have received in your history. Now, in your history, you'll also see your funding, your withdrawals, and all the other things. Execution blotter is basically only what you execute. Those data will be available over here. I hope I'm clear so far. Please feel free to keep writing to me in case you have any doubts. Now, coming to the product list, we have a whole range of products available for you all to look at. You can invest in currencies, you can invest in stocks, you can invest in indices, you can invest in cryptos, you can invest in commodities, treasuries, currency forwards, and currency indices. So there is a lot of products that is available for you all to invest in. So what I would always recommend is before you invest into any of the asset classes, uh, do the needful, speak to your advisor, speak to your relationship manager, understand what are the benefits of investing in what asset classes, what kind of returns can you make, what kind of risk is associated with each of these instruments. Now, of course, we can educate you, we can give you more education in terms of what are indices, what kind of returns or what kind of risks are associated with indices, and even with commodities, what are the fundamentals behind the commodity prices to move, what are the technical reasoning for you to buy or for you to invest or for you to uh, book your profit, and how to manage your risk on all of these asset classes. So we'll go into the asset classes slowly, but these are the broad range of asset classes that we have. Now, if we go, let me also take you through probably the indices. Now, if you go into the indices, now you have indices. Again, for those of you who are very, very new to the markets and very new to investments or trading, indices is nothing but a basket of the top shares that is traded in each of these countries. Now, in this case, when we are looking at Australia 200, you are looking at a basket of the top 200 stocks of Australia. Similarly, you have for all the other indices. For those of you who are from India, you're very familiar with Nifty 50. Now, Nifty is the top 50 stocks of India. That is Nifty. And those of you who are from US, you understand Dow Jones, you understand Nasdaq. Now, Nasdaq is the top 100 tech sector of the stocks. Then you also have SPX 500. SPX 500 is used as the benchmark for looking at year-on-year returns amongst all the other fund managers who look at who keep S&P 500 as the benchmark to see their returns for the year. Now you also have here is US 500, which is S&P 500 again. You have France, and these are the different indices of different various countries. Similarly, if you look at stocks, you can invest into stocks across the globe. Not all the companies, but you have all the major companies or from major countries. I'll just open the shares here. Now, if we look at the countries that you can invest your money into is US, UK, Europe, Sweden, Norway, Hong Kong. Now, these are all the shares. Let's say you want to invest in US stocks, you can just click on US. It'll give you the list of all the stocks that is traded on the US stock market. Sorry, I think there's a glitch here. Let me just let me open that again for you. All right, it's taking some time. This is a demo account, so it takes some time to load. Now, coming on towards the watch list, you can create your own watch list. Let's say you have a diversified portfolio and you want to make a list of the products that you are interested in. You can make your own watch list. My favorite watch list, and you can add products. Let's say SPX, which is US 500. Let's say I want to invest in gold. I will have gold. Let's say I want to invest in Apple. I can have Apple on my list and I can create my watch list. Now I have my own watch list ready here. Whenever I want to see how it is working, I can go into this watch list and start looking at the products. Let me just refresh my page. I think there is some error that is coming up. All right, I think there's an error that is coming up. Let's just do a run check over here. Okay, perfect. I think there's an error on the product list since it's a demo account. I apologize for that. But let's move on to the next till this gets rectified. Now you have your account, you have your funding. Again, account deals with your positions, your orders, execution blotter, and history. Now, the most fascinating part about this particular platform is your news and analysis. Now, this is what is going to give you the edge over all the investments or trading that you want to do. All your information that you can derive under one heading is over here. Let's start off with the economic calendar. For those of you who are very new, again, to the markets, an economic calendar is nothing but all the data that each of the country releases for their economy. Let me just skip all of these and get right into it. Now, let's look at what has come out recently. We had a interest rate decision that was yesterday, which came out. There was no change in that. And Fed interest rate, I'm sure all of you all know, is the most watched out for because the US has been raising interest rate to curb inflation, and now they are at 5.5. Now, how does this information help you in investing in any asset classes? Is basically whatever interest rate decision that they make has impact directly on the stocks. It has direct impact on the currencies. It also has a direct impact on commodities like gold. Eventually, the currency fluctuation also has a lot of impact on commodities and the stocks and indices as well. So hence, any information, especially like federal interest rate, is very, very crucial to be watched out for and also to be followed. Now, if you look at this particular column, it shows you what is low in the times in the terms of importance, what is of low importance and what is of high importance. Now, I'm just going to change my settings here on the right hand side. I'm going to look at only high importance. The reason why it is high importance is because every time this data gets released, it has a direct impact on the markets. And hence, these become a very high important data. Now, let's look at what has happened today itself, or let's start from the interest rate decision that happened. There we go. So this was yesterday. Now, if I click on so you can add a calendar to your list. So in case you want to remember, you can add a reminder on your Apple, on your Google, on your Outlook, on your Yahoo. So you can add a calendar at any point in time to keep a tab on these. Either ways, if you have the platform, you can come and check on these events every day, and all the data is already available. Now, when it comes to the event chart, this gives us the analysis. I hope everyone can still hear me clearly. I have not received any questions, so I'm guessing everything is fine. Please let me know if I'm going too fast. I can slow down as well. Now, this is the event chart. Now, what is the event chart showing me here is how has the interest rate been for the US, actual versus forecast, what was expected, and what came out. Now, if I go back all the way back to 2020, on the September 16th, you notice the actual was about about 0.25, and what was forecasted was also 0.25. And as we come into 2022, you see the interest rate starts to rise. This is now because the inflation starts going up, and as the inflation goes up, now the Fed has to take action to to bring down the inflation back to their target price of 2%. And hence, they have taken actions and steps which has increased interest rate over a given period of time. Now, the last 4 months, the last four changes in the interest rate has been the same. They have not increased. And as per Jerome Powell, if the inflation numbers eventually starts coming lower, as what they have anticipated, they could also look at reducing their interest rates going into 2024. Now, if the interest rate goes down, and what are the impacts, and what has been the impact on previous interest rate hikes? If you want to see how it has impacted the product, that is where we go into the next chart over here, which is the price chart. Now, this is the event chart. The event is federal rate interest rate, that is the event decision. And once that is done, now you can look into how has it impacted the market every time the decision has been made. If you can see this diamond over here, these are the days when the interest decision was taken. So you can go back all the way into history and see all the way from 2018 onwards, and what has been the impact. Now, of course, there's a lot of data. Let's just look at the recent one. So the last, at least the last two interest rate decision. The last time the interest rate decision that happened was on November 1st. There was no changes, and we saw the market rallied after that particular day. Now I'm looking at Euro USD over here. Why did Euro USD rally? In this case, Euro was strengthening, dollar was weakening. The reason why the dollar was weakening against the euro is because the anticipation. Every time the interest rate goes up, there is always demand for the dollar. So the dollar always strengthens against the euro. In this case, they did not change any interest rate. They kept it at the same level, and they were also indicating that in 2024 they're going to reduce the interest rate, and they could start reducing depending on how the inflation number comes out. On the anticipation of that, your dollar weakened and euro strengthened against it. And yesterday we saw a similar action over here. This was the data that came out yesterday, and we see the market has moved back up. When I'm talking about market, I'm referring to Euro USD over here. Now let's look at what was the impact. You can look at the impact on various currencies. You can also look at the impact on the indices. So what was the impact on Nasdaq or S&P 500, which is the benchmark for all the funds to see their returns year on year? If you go to S&P 500, you will see that every time there was a decision that was made. Let me just expand this back. Now, these are all the diamonds that you see where all the interest rate decision, and you see what was the market impact after they had made their decision. Now, let's again look back into the last couple of decisions that were made. This was the second last, which was in November. You see the market here also recovered after they had decided that they are not going to increase the rate further. And last evening we again had the interest rate which was not changed, and the market for today has gone up after the interest rate. Now now the next time when they have the federal rate interest rate, you would be able to gauge and analyze based on what kind of decision they come up to, which direction the market could head. Now, there has been scenarios where they had raised the interest rate and the market had dropped. Now, this is the time when the interest rates were being raised. Once the interest rate went on a pause for being raised, you see the market climbing back up. Now, we understand that every time there is an interest rate hike, that means they're trying to bring down the spending and bring down the inflation. And hence, the market also drops down because the overall impact on the market is consumers will slowly stop spending because everything is on a higher rate. And eventually, when the spending stops, the companies that make these products, they also do not end up becoming profitable. And hence, when the interest rates are being raised, you would see the markets dropping, and vice versa. When the interest rates are being reduced, you see the purchasing consumers purchasing more, and more purchases leads to these companies which produce these products to profit from it, and overall stock market profiting from that. Now, this is what you will see when you look at the past events. Now, of course, we have the volatility. Now, in this case, it just tells you how many dollars or how many euro, in this case, we are looking at Euro USD, how many euros Euro USD did, how many pips or how many points did Euro USD move after the data was released. So on an average, you understand that 67% of the time out of the last six events, the market closed on the higher end, and 33% of the time the market actually closed on the lower end. Now, I'm just going through the surface over here. You can get into much more deeper analysis of why these price actions behave this way. And using this price analysis, can you make an informed decision for the next FOMC or for the next federal interest rate? Now, this information will definitely help you to make the decision once you start going through all these statistics before you take any trade. I will also show you how you can use these statistics to make an informed decision to trade as well as manage your risk. Now, we can measure our returns. Now, you can also see what happens 30 minutes after the interest rate was released. We can also see what happened 4 hours later after the interest rate was released. Let's just look at, for an example, the last particular one, which was on the December 13th, that is yesterday. You see, 4 hours after the event, we see Euro USD going up 108 points. That's 108 pips. People who trade on currencies understand pips, but do not worry about how much pip is at this point in time. Let's just understand what kind of movement Euro USD gave 4 hours after the event. Let's also look at what kind of returns did it give 30 minutes after. So 30 minutes after the data was released, it moved about 82 pips. So that means the major movement happened in the first 30 minutes after the data was released. So next time similar data is coming out, you'll always watch out for a move that could happen in the first 30 minutes, which would be the biggest move to take advantage of the market. Now, what was the impact of it? Now you would see the impact over here. The data was released, and after that, you see the entire move that took place on yesterday's data. So now I will not get too much into detail about these analysis. This is just to run through what are the products. But if you want to understand much more detailed, we are most happy to sit with you one on one and go through each of this one at a time and help you understand and how you can utilize this to enhance your trading experience. Now, looking at the second after economic calendar is your market news. Now, of course, this is something that most investors would be looking at on a daily basis, on a weekly basis, to understand where the markets are heading, which stock is making the biggest noise, in which sector is it making biggest noise. In this case, the winner is Amazon over here, and how many mentions. Now let's look at here. You can filter which country you're looking at. Let's keep it US. Which industry are we looking at? Now, let's say you are someone who wants to invest mostly into technology sector. So you can always select technology and see which company in the technology sector is getting the biggest attention or the biggest movers and what is happening, which news is driving these particular stocks. Of course, Nvidia, Microsoft, Apple, Adobe being the top stocks and the top movers. Now you can also change it to, let's say, if you want to look at last 7 days, which are the stocks that performed and where do you want to be investing at this point of time. You can again see over here it is Nvidia. Now, if you want to take it back a little bit and understand what has happened in the last 90 days, you can go back and you see Nvidia still winning in this side of the stocks. Now, similarly, if you want to go to a different stock, let's say go to US, sorry, UK, you will see there is ARM that is being highlighted at this point of time. Now, why do these matter? Because this will help you select the stock that could be the most advantageous for your investments or trading, and this will give you an insight into those stocks. Now, let's look at the next, which is technical views. Again, now this is something which a lot of investors and a lot of traders love looking at, is because it gives you levels of daily movement. Let's just directly go to indices, or we can even go to stocks. I'm sorry, it's taking some time to load. Okay, let's just go to indices maybe. All right. So now, if you look at indices, like I mentioned to you, indices is a basket of shares. Now, let's look at our SPX, S and P. I think I'll have to find it manually. All right, there we go. So now we have SPX for the day. Now you get analysis on 30 minutes. You sometimes get analysis on a daily basis, or you also get analysis on a weekly basis. Now, on a 30-minute basis, this is showing which direction you can expect S&P 500 to move. Okay, so what are the levels that we have to watch out for? What are the direction we are expecting the markets to move for the day? And what are our preferred levels? Now, let me just go through this one by one so that you can understand each of the points that is mentioned over here. When they say pivot is basically the midpoint or the average or the median point where the price action for today either comes back towards or is beginning from. So it's a midpoint, and that price is here is 4,744. Now, our preference, it says long positions above 4744. So if it's above 4,744, you can take a long position, meaning a buy position, and you can expect a target of 4,800 and 4,820. Now, alternate scenario is if the price does not move above 4,744, then it could actually drop all the way till 4,708 or 4,700. Now, those of you who understand short selling, you can actually take a short selling to gain from the market drop. But in this case, let's not get into short selling. We'll just look at what are the next levels that the prices could bounce off from. Now, here, if you look at it, it is talking to you about support and resistance. When they say support, it is when the prices come at the lower range, these are the levels that a trader would look at buying, probably at 4,700, 4,744, and this will be the mid price over here. Now if it goes, let's say someone who has bought it at lower levels, once you see the price come back towards 4,800 or 820, this is where you find resistance, meaning the prices could find it difficult to move beyond this range. So hence, if you had bought it at 4,708, you could look at taking your profit and exiting from this position. So supports again is a level where you could consider buying from. Resistance is where you could potentially exit from the trade and look for the next opportunity. Any doubts so far? If you all have any questions, please write in the chat. I have not received any questions, so I'm guessing everything's going smooth. So please feel free to write any questions on the analysis, any specific instrument that you want to see. Let's look at that. I think that's a better way to have more interaction. Do you have any product that you have in mind? Let's check the levels for those products. I'll just wait for someone to write. Okay, commodities. Let's look at gold. Now here it tells you that gold, it is giving you a view for daily and weekly charts, which are also bullish, meaning we are looking at a 30-minute chart. That means every 30 minutes we can expect or on a 30-minute time frame or on a short time frame, we can expect the gold prices to move from these levels to these levels. But it is also reconfirming that a daily and a weekly chart also is showing that the gold is very bullish meaning the gold is very strong, it can continue going further. Now we can change your time frame here. Let me go into weekly first. Now I go into weekly and I go to gold. On a weekly, gold is showing a very heavy rise. So it is expected to go all the way to 2,170, 2,280. That is the forecast on the weekly. Now, if anybody who's looking at a weekly chart is always an investor who is willing to invest and hold on to it for maybe 6 months to a year or even more. Anyone who is looking to take advantage of the market on a weekly basis, they look at a daily time frame. Now, on a daily time frame, we can see gold. I'm trying to find gold on daily. Let me just type. There we go. So on a daily time frame, they were expecting the prices to actually come down a bit before it starts bouncing back up. However, it has not dropped. It has gone back up after yesterday's federal interest rate news. Now, looking at the 30-minute chart, we see gold continue to go up all the way to 2058 and 2071. Now, using this analysis, let's just go into the gold chart and see what gold is doing at this point of time. Let's compare the levels that was suggested and to what is happening currently. I'm just going to open this side by side. And here is the chart for gold. Let me just give you a brief explanation of the chart. A chart basically shows there are different types of chart. You can look at a colored chart, you can look at a line chart, you can look at Heikinashi. Heikinashi is basically shows you trends. We'll get into all of these slowly, but for now, I'm just going to keep a simple candlestick chart. Now, when I'm looking at the time frame, I can look at even a 1 minute time frame. So that means each of this candle represents every 1 minute. Okay, so if I go back, I can go back all the way till last night, the maximum. Similarly, if I look at a month, each candlestick represents 1 month move of gold. So in this case, I can go all the way back to 2005, 2010, 2015, 2020, and the current price. Now, if I look at a daily chart, each candlestick represents the day. Now, we see on a 30-minute chart, since the analysis was for the 30 minutes, every candle represents a 30-minute over here. I put my crosshair. So this is at 2:30, this is at 3, 3:30, 4, 4:35. Right now it is 7, and this is 7:30 candle. So each candle represents basically a 30-minute move. As per the analysis over here, it has given us the pivot point, which is 2044, and we see on the chart 2044 being the pivot. So if you notice, the price is still around the pivot, and the target for the day, if the prices start pulling back up, is it can go up till 2058. So now for the day, the high it has made is around 2047. So that means there is still more room for gold to perform for the day. Since we are looking at 30 minutes, we are looking at only a daily performance. But if we are looking at a weekly chart, which I showed you earlier, where the gold is expected to move up higher. Now this is how a weekly chart looks. This is beginning of the year 2020-23. This is where we are at 2020 23 end. So there is a good chances. Remember, like I mentioned, anyone who's looking at a weekly chart is looking at a longer term. It could be 6 months to a year. So in 6 months to a year, the target that was given was about 2100, and I think that could easily be possible if the market continues favoring the gold prices. Now, coming back to the last bit of it, is the technical insights. This shows us what are bullish, what is expected to continue to perform, and the most bullish. When I say bullish and bearish, bullish means the market, the prices which is expected to go up. Bearish meaning it is expected to come down. And you see again we have Nvidia, that is one of the top performers, and you will get more details once you click on the stock. Now, if you're looking at investing on a longer term, it says a long term more than 9 months. Nvidia is expected to move higher, and this is the target that is given. Currently, Nvidia is trading at 480. I'm sorry, let me just move this up. It's moving around 480. The target given is about 580. So it could move another $100 up. That is the expected target price, if you can see over here. Pattern duration, there's a pattern also on it, which is a technical pattern. It's a continuation diamond bullish pattern, meaning if this pattern gives a break above, you can expect the prices to go towards 600. So hence the target is roughly between 575 to 598, and the duration expected is the pattern that has formed is in the last 125 days. Expected the pattern to move would be in the next 125 days. So it gives you more details into why this particular instrument can continue moving on the upside. Now, in terms of analysis over here, you have Morningstar technology sector, which gives you a detailed report. Um, there we go. Again, there is a pattern here where they're expecting the prices to go above historical events. Here are the technical charts. So you can look at it on a weekly view. You can also look at it on a daily view. So the reason why we are looking at all these analysis is eventually once you start looking into the platform and start looking at which asset classes that you want to invest in, and in those asset classes which instrument that you want to invest in, these information will be very crucial while you're making those decisions. Now let me go back to the screener over here. On the screener, we see a few other stocks that is giving signals. Over here, we can expect a short-term bullish move. That means the price is expected to move. You have a couple of stocks which is expected to go down, short-term bearish move. Like as I mentioned, if you're looking at short selling, these are the stocks that you could be looking at. Filters, you can always filter if you want to look at only stocks, or if you want to look at only ETFs, or if you want to look at only optionable, right? Now, you can also again look at the price movement and volume, minimum, maximum. So these you can uh, put your criteria as per what your analysis is, whether you're looking at a short-term view or whether you're looking at a long-term view, for you to take any kind of decision to invest in the market. Now, again, I just brushed through the surface. Now, coming at these 4 points, just to sum it up, economic calendar shows you all the important event that happens on day-to-day basis for each of the countries. Market news, basically all the financial news regarding commodities, regarding indices, regarding currencies, regarding stocks. Technical views gives you levels where you can look at support and resistance for you to buy and sell. Technical insights basically takes you into all the stocks, which gives you more in-depth analysis of which stock you could be investing in, and what is the expected target, what time frame are you looking at those expected target. Let's just look at one more example for this on Tesla. I'm sure a lot of people have their eyes on Tesla. Let's see the view on Tesla for long term. It is showing a bullish move. Let's look at a short term. Again, it is giving a bullish move. Short term, still bullish. Summary, basically, the prices are expected to continue on the bullish side of it. So, I'm sorry, let me just go back to the main page. There we go. Let's look at any other stock that you all want to see. Please feel free to ask me. Amazon, again, there we go. Now we have Amazon moving above a 200-day moving average. So you can expect this pattern to complete in a week. So if you're looking at a shorter term movement, you can expect the prices of Amazon to move in the short term. However, if you can see, the bullishness is not very, very strong. So you would always want to wait for all the four stars or four of these bars to be filled for it to be a strong bullish move and then invest into Amazon. When you're looking at a very short term, that is 2 weeks to 6 weeks, it is giving you a very strong bullish signs for the markets to continue on the upside. Now, let's get into the live trading of how you can use these analysis. Most importantly, how to manage your risk and what are the tools that is available in the platform to manage your risk. Let's take an example of SPX and I'll open the chart as well as the order ticket. Few important things that you need to keep in mind is your account value. Account value is how much money you have funded into your particular account. Now, we'll get into what is total margin, what is margin available slowly. But let's understand our account value is the amount that you have invested. Now, if I'm buying US 500, which is the top 500 stocks of US, there are a couple of questions that we need to ask ourselves. One is if we are buying, why are we buying US 500? What is the best price? And what time frame, what kind of returns are we expecting, or in what time frame are we expecting these results to happen for us? The third is what are the ideal prices that one should be entering into when you want to buy S&P 500. Now, let's assume that you are a long-term investor. You would always look at a weekly chart, or you would also want to look at a monthly chart and see how the market has been performing over a long period of time. Now, remember I mentioned that if you're a long-term investor, now you're looking at how much the price could move in the long term. Now, let's say if you're a short-term investor, probably you're not waiting for something to move in the next 3 years or 5 years. You're trying to take advantage of the movement that is happening on a day-to-day basis. Now, you could also be a moderate, let's say a weekly a swing trader where you want to capture the entire week's move or the month's move. I'm just giving extreme of a very long-term trader investor versus a short-term investor. Now, when you're doing a short term, probably you would be looking at a 30-minute chart, you would be looking at a 4-hour chart, or maximum is a 4-hour chart for short term. If you look at a daily chart, probably you're expecting to hold on to your investment for a week. So let's look at 30 minutes. Now, on a 30-minute, you see the market has been on the upswing. We go to our analysis. Let's go to technical views and let's look at what is the view for SPX today. So I'm going to go to indices and I'm going to find S&P 500. There we go. Okay, and the indication is S&P 500 is expected to go up. Now, for the day, the prices are expected to go up. I'm just going to go to a daily chart and see what exactly is happening. I see the price for today has already risen by almost $21. It is currently trading at 4725. As per the analysis, it could continue to go further high. So I am going to look at a good entry point. Now, of course, now we have the analysis which says what are the good entry points. Let's look at our support and resistance level. Technical views, supports are at 4708, 4744. Now, if I go to my chart, 4708 and 4044. So we are at 4726. Now this is a good level to enter because these are the levels where the prices are expected to bounce back up. And if you can see over here, the prices have been trying to bounce back up from these levels. So if that being your indicator to buy, you can buy it on short term. Let's say you buy about 10 units Like I mentioned, now you have $100,000 in your account. You're taking a 10 unit position, which is almost $50,000. Now, it's okay to take a bigger exposure as long as you have a stop loss and take profit in place. Now, how do you keep your stop loss and how do you keep your take profit? Go back to your technical views. You understand your entry prices are at 4744, 4708, and 4688. That means if it goes below 4688, you can expect the prices to continue dropping. So you always want to keep your stop loss further away, 4688. Now you have kept your stop loss on the lower level. Now, if the price starts dropping and goes below 4688, you will exit. Let's keep it at 4670. You will make a loss of $600. Now, take profit on the other hand. It says when the prices start moving back up, you can expect it to go up to 4820 and 4840. Now, you can keep a take profit at 4840. So, you're risking about $600 to make a profit of $1,000. Now, in a case where you do not want to risk $600 on one single trade, you can always change your number of units, reduce it by half. Now, automatically, your losses reduce and your profits also reduce, but the prices remain the same. I'm sorry about the background noise if you all can hear it. I think there's some drilling happening on the other floor. I'll try to wrap this up soon. Let's say if you are someone who do not mind taking a little higher risk, you could always take even a 20 unit trade, provided that you have the stop loss. Now, please understand, stop loss is very, very crucial because if you do not have this and then the price starts dropping, let's assume the price has dropped all the way to 4,500. Right now, we see the prices at 4,700 and it drops to 4,500. Now, your loss has increased to 4,600. Now, let's say the price does not stop and it continues dropping, it goes down to 4,000. Now, your loss has become $14,000. Now, what makes an investor successful or a trader successful is how they manage their risk. Now, you always manage your risk, you always risk. Let's say if you're risking about $300, you should always wait out till you make a $600 profit. Always have a ratio of 1 is to 2. If you're risking $100, you should always look at making $200. Now, how do you make a decision to invest? One of the criteria is you can use the support and resistance to understand where to buy and where to book your profits, where to buy and where to keep your stop loss. Now, these levels help you for an intraday level. Similarly, same analysis could be done when you're doing long-term trading, especially if you're doing a long-term investment, especially with leverage. If you're doing any investments without leverage, then you can do simple analysis such as looking at the market swings on a monthly candle, and you look for opportunities. Now, every time the market drops, it drops a certain percentage before it picks back up. If you see back in history, now S&P 500 over here in 2020 when it market crashed, there was a certain percentage it dropped by and then the market picked up. So similarly, at this point of time, if you're looking at a long-term investment for the next 4 to 5 years, this is a wrong time to be looking at making any major investments. Although you could start investing smaller amounts at this price, but a bigger investment, if you're looking at next 2 to 5 years, would be when once S&P 500 gives you a drop. Now, if S&P 500 does not have the ideal opportunity for us to invest today, we can always look at our alternative investments. We have multiple products that you can look into, which is of value to buy today, which is already at the bottom, and you could invest into. Let me show you Hong Kong index. Now we have Hong Kong, the top 50 stocks of Hong Kong. I'm going into a monthly chart. Now, if you look at Hong Kong, now Hong Kong is something that is at a value buy because you see historically here we see a big drop 2009, then markets recovered, then there was another drop in 2012, market swung back up, then there was a big drop in 2016, then of course in 2020 when the pandemic hit, that is over here, market recovered, and at this point of time in 2023 we see market drop, a recovery, and is still trading at the lower level. So now in this case, as a value investor, if you're looking at next 2 to 3 years, this is a place where you could invest. Let's do a simulation of this particular investment before we close it. I'm just going to close all the other tabs. Let's say we buy Hong Kong today at 16,000 and I have $100,000 with me to invest. I'm going to invest $100,000 and buy Hong Kong. Now take profit. Basically, Hong Kong at a given point was trading all the way at $30,000. Let's target a $25,000 from here, 16 to 25 only, halfway up. So that is 25,000. Now you buy Hong Kong with money without leverage, without more than how much you have invested. If Hong Kong at whatever point in time, let's say 6 months, 1 year or 1.5 years goes back all the way till 25,000, you make a 50% return because it is trading at a lower level. Now, can Hong Kong continue going down further before it goes back up? Yes. It could drop further. Probably it could come down till 15,000 and go back up. Now, the more lower it comes, the more discount you're getting to buy Hong Kong on. And that is where you can always invest more and buy more of Hong Kong. Now, let's assume the case Hong Kong has come down to 15,000 and you would invest probably about $100,000. And once the price goes back up to 25,000 after that, you will be making a return of $66,000. Now, in the case where you would want to take leverage, you have $100,000 in your account, you want to buy $200,000 worth of Hong Kong. Now, please keep in mind every time you take a leverage, the risk increases significantly. Although the profit also increases, bear in mind the risk increases. So if a leverage trade is being taken, please understand the risk associated with it. Always keep a stop loss to an amount which you do not want to lose beyond. Now, let's say in this case, I would let's say if I was the investor, I did not do not mind taking a risk of $10,000 if Hong Kong drops from 15,000 to 14,000 for a profit of 25,000. Once Hong Kong goes back to 25, I will make a return of $133,000. Now I am okay to take this risk and hence I am taking the leverage. And in the hope that if Hong Kong moves up to $25,000, I make $133,000. But in the case if Hong Kong drops, I exit with a $10,000 loss. Now, let's say you do not want to be the person who wants to book a loss because you know eventually the market is going to go back up. In that case, you can always do with $50,000, which is 100,000. You have 100,000 investment here, and you invest only $50,000 into Hong Kong without taking any leverage. In this case, you can hold on to Hong Kong till it goes back on to 25,000. Now, even more better than this is to always diversify your portfolio. Now, we were looking at one single product. You could find instruments from different asset classes and you can invest each a portion depending on your risk appetite, depending on your age, depending on the duration that you're looking at. All of these matter when you're diversifying. Now, if you are looking at a very long term investments, you could look at a couple of stock portfolios. You could invest $2,000 in each of these stocks. Then you could look at ETFs, you could look at a few commodities, you could look at bonds, and you put your $100,000 in different asset classes to diversify. The more diversified you are, the more risk free you're from. Of course, there is risk, but the risk reduces significantly because your diversification has invested your money into different asset classes. Now, however, if you invest in different products which belong under the same industry, then your risk increases again. Now, for example, if you invest all your money only in technology, you're buying Apple, you're buying Amazon, you're buying Nvidia, you're buying AMD. Now, all of these fall under the same industry category. Now, that might give you a diversification within the industry, but if the overall industry drops, your risk increases again significantly. Now, when it comes to diversification, when it comes to finding the right asset classes for your objective, for you to find the right investment strategy, please feel free to reach out to us. We can sit one on one, we can discuss what your investment strategies are, what kind of returns you're looking at, and what time frame. And then we would be able to understand your needs better so that we can educate you and give you all the tools that you require to make an informed decision for trading or investments. Thank you again so much for waiting out with me till the end. I hope this session was useful for you. Please leave a feedback. I did not get any questions, so I'm guessing I was very clear about everything that I was explaining. But I would also appreciate that if you can leave a feedback for me, so that I can improve in case any area needs improvement in my explanations. At the same time, if there is any specific topic that you want us to cover, any specific areas in the platform, in the products that you want us to cover, any queries that you have in the global markets, please leave all of that in the chat. I would really appreciate that. And for the next session, we could cover those topics for you. I would also welcome you all to come and meet us one on one and discuss more in detail if you have more further in depth questions for us. Thank you again and have a good evening.